Welcome back. It's time now to take a look at the top business stories. UAE Central Bank to tighten liquidity regulations. GCC banks increase profits by 25% in Q1. And US House defeats debt limit bill. Let's look at the UAE stock markets first. Shares ended the session on a positive note. The DFM General Index advanced a second day, rising 0.9% to reach 1,574 points. Emirates NBD was one of the best performers with a plus of 5.5%. Dubai Islamic Bank was up 1.4%, Tamwil gained 3.6%, and index heavyweight Emaar Properties was up 1.6%. Stocks to lose were Global Investment House, which fell 5%, Gulf Mineral Water and Processing Industries Company, which lost 7.4%, and Arab Insurance Group, which fell 5%. 187 million shares were traded, valued at 199 million dirhams. And over in the capital, the ADX rose 1% to close at 2,666 points, with the banking sector contributing the most. Abu Dhabi Commercial Bank was up 0.3% today. On speculation, it may sell its 25% stake in Malaysia's RHB Capital to the Abu Dhabi Investment Council. Abu Dhabi Islamic Bank was up 1.3%, First Gulf Bank rose 2.6%, and National Bank of Fujairah rose nearly 10%. Suru Real Estate was up 0.8%, and Etisalat again 0.5%. 101 million shares were traded, valued at 167 million dirhams. And let's now take a look at the GCC markets, which ended mixed today. And now to our top stories. The UAE Central Bank is looking to tighten the rules surrounding how Arab banks manage their liquidity in order to better cope with possible future financial woes. Lenders will be required to comply with qualitative, quantitative, and reporting requests on liquidity risk management as of September, according to an official statement. The aim of the regulation is to avoid liquidity problems among banks, the circular said. This is achieved by ensuring they have a robust risk liquidity management and they are holding sufficient liquid assets to withstand a liquidity stress. The UAE banks still remain hesitant to lend, although deposits stand at their highest level in more than 2 years, an indication for high liquidity levels among local banks. It was a profitable start into the year for the GCC's banking industry. The region's lenders recorded a 25% increase in net profits in the first quarter, indicating the region's banking sector is back on track after more than 2 years of uncertainty. It has been a while since the region has seen an increase in profitability in the banking sector in all GCC countries. Kuwait-based Global Investment House was quoted in an article. A report by the company showed that UAE banks, which control the largest asset base in the Arab world, recorded a staggering increase of 66% in first quarter profits over the previous quarter. Emirates NBD, for instance, posted a sharp rise in net earnings of nearly 250%, helped by the sale of its stake in Network International. The lowest quarterly profitability growth was registered in Kuwait and Oman, standing at 3% and 4% respectively. And in our fast financial news, DP World celebrated its debut on the London Stock Exchange today. The world's third largest ports operator duly listed 830 million ordinary shares to attract more investors and boost liquidity. DP World CEO Mohammed Sharaf told a local paper that with the different time zones in Dubai and London, that gives investors more time to trade the stock. Japanese exports to the UAE dropped 9% in March, Japanese data showed. Reason for the sharp drop was the devastating earthquake and tsunami that hit the country mid-March. Meanwhile, Japanese exports to the whole of the Middle East fell 7% during the month. Saudi Arabia's gross domestic product is projected to rise 6.5% this year, according to the IMF. Inflation is likely to rise to about 6% as a result of both domestic and important price pressures. Growth will be driven by increased government spending, a recovery in global demand, and higher oil prices, a report said. And after the break, we will run you through what's making the headlines in international business today.